We're live without a net here.
We're live, yeah, we're live with all 6 viewers of the Magic Internet Money Podcast YouTube channel probably going to tune in all at once. The servers are going to go down.
Nice.
I don't have as many subscribers as you guys have at Real Vision. Not yet.
I think you're the competition, man.
Well, Ash Bennington from Real Vision, thank you for joining me on the Magic Internet Money Podcast. We get to hear you interview a lot of people on Real Vision, but I thought it would be a good fun chat to have with you to hear more about you and your history and what you think about these things, because you're a very good interviewer. Like you just don't interrupt people. You let people get their thoughts out. You expand on it. You help moderate if it's a moderate, but you don't usually get to hear what Ash thinks deeply about these things. So I'm glad to see you came on and happy to have the chat with you.
Oh, thank you. Looking forward to it.
Yeah. So I recently went on Real Vision with you, and you did an interview with me, and it was widely received well. I think there was a bunch of people reached out to me saying that they liked the conversation. Since Real Vision has kind of taken a turn to the cryptoverse rather than Real Vision Crypto, anyways, is all about cryptocurrency and that side of things. A lot of the viewers on Real Vision Crypto typically don't get to hear from the Bitcoin perspective as much. So there was a lot of people that just didn't even realize that there's like a history there behind the fork wars and things like that. I'm curious, did you get any feedback on that specific episode, or you guys just are just heads down with all the craziness you're doing, like 10 interviews a week or something?
I don't even know, because we have the Real Vision platform, where we do the capital markets and macro stuff, and then I host several days a week the Real Vision Daily Briefing, which is a daily show, sometimes live, moving toward all live, I think, coming in May. And then, of course, I run the Real Vision Crypto platform, so it's pretty heads down. But I do remember that interview was very well received, and it's something that that I personally, I should say, I'm really passionate about doing, which is including more from the Bitcoin perspective back into the mix at Real Vision. As you pointed out, Real Vision initially, I think going back to 2014 when Raul spun it up, Bitcoin was a very important part of his vision and something that he thought about from a macro context. So I think that that was where we began, and then we've begun to explore some of the other technologies, protocols, and digital assets more broadly. And I think it's really important to have the pure Bitcoin perspective back on the show, and it's something that I just don't think we talk enough about, and it's something that I'm just really committed to doing more content around.
Do you guys look at the post analytics stuff and see, okay, how much engagement did this interview get versus a typical interview? Do you do much analytics stuff there on the interviews?
Yeah, Real Vision is getting to be a pretty big ship. We're, I think, about 100 people or thereabouts. And so we have a whole team that looks at analytics. I probably don't spend as much of my time doing it as I should. I kind of go into the meetings and the briefings, and I just generally get the overview from the people whose job it is to stare at the numbers. But, Brad, as you've been on the show, I'm really interested in talking to people. And so I try not to, and, maybe this is not like the most business savvy or analytic or product savvy thing to say, but I'm interested in people. I'm interested in conversations. And I guess I let the analytics inform me at some high level, but if I'm having Brad Mills on, I want to talk to Brad Mills about the stuff that I'm interested in. And so I let that be my guide, probably more than the numerics.
Yeah, right. I guess I was just thinking, would it be trends? Do you guys watch trends and stuff like that to see what the viewers are engaging with more? What type of content? Because I saw that the one that you guys did with Peter Brandt, Laura Shin, and Willy Woo was really well received as well.
Yeah.
And how does that stuff compare to the regular Real Vision content where you're doing markets content, like the gold market or the bond market or something like that? Is the viewership different in terms of the viewer base and the numbers? Is it a magnitude difference, or what's the difference between Real Vision and Real Vision Crypto?
I think it's pretty close to a threefold difference, meaning we have more people on the crypto side than we do on the traditional capital market side. Obviously, Real Vision Crypto is 100% free. So excuse me, not a trial, not like you just sign up, give us your email address, and you're free to access all of the content. Real Vision on the capital markets and macro side, what we just call Real Vision internally, as opposed to Real Vision Crypto, is a subscription service. And so obviously when people have to pay for it, it's going to be harder to get people to sign up, right? For something that's free, it's a little easier to bring people in the door.
I wonder, you guys should run IQ tests to see what the difference of the average what the average IQ is between the Real Vision subscriber and the Real Vision Crypto subscriber. Bet you there'd be a threefold difference there too.
I'm sure they'd be a lot younger. I think that's probably the one demographic thing that we notice, obviously. And fortunately, we have more women, I think, on the Real Vision Crypto platform, which is great.
Oh, that's interesting. Is it? I wonder why that would be. I wonder why there'd be more women on the. Maybe because women are sort of more risk averse, more conservative, so they would consume the free content before they would spend the money to go on the Real Vision side and get that content.
Well, I think I have probably two potential answers to that. I think it's just, and they're sort of related, which is I think that look, the world is opening up, and I think that it's great that that crypto is infinitely less male dominated than traditional finances. I mean, I can remember over the years going to traditional financial conferences, and it's overwhelmingly male. And when you do that on the crypto side, when you go to Consensus or the other events, there are definitely more women. And I think also some of that is a function of the fact that the audience for crypto skews much younger. And I think there's just been much more opportunity for women in this generation than there was in the past. And clearly we're not there yet. We're not at parity. We're not where the representation probably should be. But I think it's a sign that the culture is making some strides in the right direction.
Do you think I don't think that it makes sense that we will ever get to kind of equal parity in something like that. But actually, the longer the time goes on, the trend is more and more towards women having more control over financial decisions, and women more kind of, I think the stat now is 80% of financial decisions women have influence over. So it only makes sense that will go, more and more equal over time.
Yeah. I mean, look, it's not really my job to think about the big societal issues. It's just my job to figure out how we can make our platform more inclusive to women and bring on more women guests and make it a place where women want to be. So, I mean,
I'd like to go back a little bit and learn a little bit about how you got into the space, because there's, you say sometimes on Real Vision that you worked at CoinDesk. And for people that don't know CoinDesk, it's one of the biggest news organizations originally started talking about Bitcoin mostly, and then sort of branched off into covering all of blockchain and cryptocurrency.
Yeah.
What was the story there? How long have you been at Real Vision? Did you go from CoinDesk to Real Vision, or were you doing both? How did that happen?
I think I went directly from CoinDesk to Real Vision in pretty short order. I joined Real Vision in 2017. So I've been there for a while now. And I've been there. I was gone for a couple of months, and then I came back. But yeah, I've been at Real Vision for a long time. And CoinDesk was really the place that I feel incredibly grateful to have had that experience in 2017 when I was at CoinDesk, to have the opportunity to be around really smart people who were totally immersed in the crypto, Bitcoin, blockchain, digital asset space. And it was just an incredible experience to me. It's something that I've been interested in. I actually had my first Bitcoin blog, and most people don't know this, in 2013. It was called Bitcoin Trade Desk.
Really?
Yeah, and it's still up on the Wayback Machine. And it's kind of a funny idea, we decided that there wasn't enough Bitcoin news. I think this is really before CoinDesk. This is really before there were dedicated, big dedicated Bitcoin news sites, at least. And so my business partner and I decided, the Drudge Report, the conservative blog, the Drudge Report. So what Matt Drudge does, and historically before there was, Matt Drudge has been at this for a long time. So before there was foxnews.com, what Matt Drudge did was he basically put up this very simple web page, and he would go around the web, and he would clip conservative news articles or articles that conservatives would be interested in. He would post them on his main page there, and you could just go and kind of look through them. So we had this idea that we would basically do, we called it, this was like the pitch meeting, like the Hollywood style pitch meeting, it's Drudge Report, but for Bitcoin. That's what we're going to do. And we hired a stand-up comedian to go out and troll the web to find these Bitcoin related articles. And then she would write up these like really funny headlines. And this was in 2013. And obviously, you look back on it and you think, the money invested in that business, my God, if we had just bought Bitcoin instead. But, at the time, listen, hindsight's always 2020. And I can remember having conversations with people who would say, listen, Bitcoin's great, but a lot of the price gains have already happened. It's 2013 now. It's in the double digits, man. It's, and so it does give you kind of a perspective on that. And it was a great experience though, and I was interested in it from the tech side. I was interested in it.
So
from the
you started
side.
that, or was that something that you were like a co-founder of? Like,
I was a co-founder of Bitcoin Trade Desk. It's actually still in the Wayback Machine. The first, I think the first one that got indexed was like in January of 2014. We spun.
Whose idea was it to hire the stand-up?
I think that was mine.
That's a good idea.
I think that was mine. She was awesome. She was
Hopefully, she bought some Bitcoin.
I believe she did.
She
did.
So back in 2013, you were thinking about Bitcoin, and you had Bitcoin Trade Desk. What were you doing at that time that made you want to start a news site for Bitcoin?
I was interested. So I'd been a blogger. I'd written about finance and economics. I was working, interestingly enough, for Nouriel Roubini, who people obviously in the Bitcoin space know as one of the biggest Bitcoin bears, of course. But he's obviously had a very long career as a macroeconomist. And I was running his macroeconomics blog, and we worked together for years. And I just did various things, mostly on the writing side. So I'd been a reporter at CNBC, and I'd done a lot of blogging at CNBC. I think I wrote, I want to say something like 700 blog posts in a year, which is a lot.
Wow.
So I'd always been interested in, and I'd also always been interested in tech. Like, first of all, it's really weird talking about myself, right? Because I'm always interviewing other people. So it's like the strangest thing. Like coming into this interview, like because I had it in my calendar all week. I was like, okay, we're gonna be sitting down with Brad on Wednesday at 3 p.m. And like I kept feeling like I need to do some research. Like, no, you don't. You're not researching anything. You're talking about yourself. It's such a weird feeling.
Yeah, I mean, for you, you guys are hustling. You're doing tons of interviews. I imagine that, it's hard to, I don't know. Is it hard to censor yourself because you kind of like refrain from giving too much of your opinions on things?
Yeah.
Is that difficult, or is that like just something you've kind of trained into yourself when I'm moderating or I'm interviewing, so this is not about me. I don't want to say my thoughts. I just want to let this person get their thoughts out.
Yeah, for me, I always think like I just want to hear what the guest has to say, right? And it's not that I don't have opinions. I do have opinions. It's just like for me, it's like I don't think when someone tunes in to see you and I on Real Vision, like they want to hear what Brad Mills has to say. Like that's why they're there, and that's like what I want to give them. And so for me, it has been sort of like a process, I guess you could say, sort of deliberately training yourself to be like more like the kind of the background rather than the foreground. In fact, one of my quotes from we have an annual or semi-annual event that we do called the Real Vision Crypto Gathering. It's our big annual event. Actually, I think we do it twice a year, but it's our big event. It's a big deal for us at Real Vision, and we create T-shirts around it, like for merch. And my like signature T-shirt says "aggressively neutral." In one of the interviews, I was like, "I am aggressively neutral." Like that's the role I want to play, because I want people to come and hear all different opinions, all different views, and hear what the guests think. And so I'll occasionally ask a question, like if there's something that I disagree with, or I know there's another side to the debate, I will say like, hey, but Brad, there are a lot of other people who you say X, but there are a lot of people out there, they say Y. Like, what do you think about that? What are your thoughts? But my job is not to, like, I hate, for me, like, the thing that irritates me the most in an interview is when a journalist argues with the guest. Like, to me, that's just so annoying, because it's like, the guest, they do this like 70 hours a week. This is their whole life. And you prepped for this interview for like 90 minutes. And now you're going to be like, wow, Brad, but I have a question for you. It's like, dude, come on, man. Just let the guests say what they have to say. And yeah, you can ask a good question or two, but my feeling, and this is kind of like, I think it's very well suited to financial journalism. I think it's very well suited to the Bitcoin and digital asset space also, which is like, if I have a guest on that's like super bullish about a stock or like a commodity, like let's say I have someone on who's like, oil is going to $200 a barrel and I'm going to make the case for why that's the thing. So I could debate them. Like, I obviously research these things ridiculously. So I could argue the opposite. I could be like, no, oil is about to crash. But my feeling is like, why would I want to do that when I could have just like somebody on the following week who's going to make the opposite case, right? Like, to me, that's what I want to do. Like, I don't want to put myself at the forefront of anything. I want to just like kind of hang back and be the, kind of like the midwife who births the truth from the guest as they see it, and to find a way to, I always want everyone, and I know this like sounds weird, but I always want everyone to look good. And I always want everyone who comes on, maybe this is a better way to say it, Brad. I want everyone who comes on to make the strongest version of their argument, right? I want them to make the strongest version of their argument. And if there's another side to that argument, I'll have someone on make the strongest version of the opposite side of that argument. And that's really how I think about it. And that's the thing that I find intriguing.
I guess that's really the difference between like financial journalism and like a media company that's producing content, and the profit model is to whatever, sell subscriptions, sell ad revenue, grow subscriber base, whatever the revenue model is. Your mission as the company is to just put out a lot of content, and not necessarily like, this is what we were talking about in the Clubhouse room that time that you came in, and me and Corey from Swan were kind of like jumping on you about the Real Vision content not being too shitcoiny and not Bitcoin enough. It was Corey was saying that it sucks to see the Real Vision guests come on that like are shilling Ripple and all these random shit coins, and not have like a perspective that is countering it, because it's money, and it's like it should be more of a debate if it was like a podcast or a debate. But right. It's like Real Vision crypto anyway is not really a forum to kind of like get to like debate the ideas. It's a business to put out content. And do you think like, I don't know that I would agree with that. I think, look, it is about getting at the ideas. I just think that like, it's a different model and it's a different way of getting at the ideas, right? So like, the reason that we're so passionate about having you on, Brad, is because you have this perspective, you have this opinion, right? And you are very passionate in your advocacy of Bitcoin, the primacy of Bitcoin, the future trajectory growth of Bitcoin, how a lot of these coins that are out there are going to just die. And like, we want to get that idea out. But I just don't think that like, I don't think I'm the person to do it. Like, my job is to be neutral. My job is to find the Brads of the world who are going to come on and make that argument. Okay, hold on. Do you actually think, though, like personally, that something like pick random coin, like let's say, what's a random DeFi coin, like Uniswap coin?
Mm-hmm.
Like, I know you deeply because you spent time at CoinDesk, and you saw the whole like 2017 bubble. Absolutely. Craziness. You guys covered the whole like bear market of crypto and blockchain, how like industries are using blockchain, and like the blockchain, quote unquote, the blockchain has some benefits for businesses and industries, but the tokens are kind of divorced from the fundamental use of a business using a blockchain for supply chain management or whatever, niche you want to say.
Yeah.
But like, I mean, we saw the same bubble, right? We saw the same nonsense happen in 2017, the bear market in 2018, and now it's coming back again, and everything is just like, oh, but now it's DeFi, so it should be worth billions of dollars. Like, do you think that there is a long-term value for those same sorts of tokens that were released in 2017 that ended up getting wrecked in the bear market? Or do you think that it's different now?
Well, I mean, almost the way you phrase it, the answer is almost definitionally no, right? If you thought the tokens that got wrecked in 2017 were bad, and there are similar bad ideas today, do I think that all of them are going to survive? No. But I would say, this is a great conversation. It's not a short answer. It's a long answer, but I'd love to have it because I'd love to explain my view about it.
Well, let's book a time next week and we'll have the conversation.
Listen, so the first thing I would say, and I say this in total humility, which is I have opinions, right? Like I have my opinions and I'm happy to give them on the show, but I don't have a formal outlook, right? Like I don't have a price target. I'm not an analyst, right? I'm an interviewer. So I'm someone who talks to a lot of people, and like I'm not someone who's like, this is my view of the market, which is very different than like you can find like, the guy who's sitting next to you at the bar will also have an opinion. I'm happy to give mine, but it's important to make the distinction that it's not an outlook, it's not a formal target, and it's not a formal analysis. My view is that I believe that Bitcoin, my personal view is that Bitcoin is always going to have an incredibly special place in this community. And I don't mean that in like a cheesy, like, oh, it's very special. I mean, I think that the clearest case for Bitcoin is the digital gold store of value function. Raoul Pal, of course, the CEO and co-founder of Real Vision, has said the phrase that I think is amazing is the world's most pristine reserve asset. And I think Bitcoin can be the world's most pristine reserve asset. I would also say that we are making, and this is my traditional finance background speaking here, is like we are making statements about the future, and forward-looking statements are always uncertain. And so I have a great deal of humility when I say that. Like, that's my belief, that's my opinion, is that Bitcoin has that potential to be that reserve asset. But I would also say that in my view, there are other functions that I just don't see Bitcoin serving. And I can
interview over. Let's close it.
I'll give you two examples. I'll give you two examples. The first is trading traditional securities. So in my view, I expect that if we were having this conversation in 2031 and we were talking about Microsoft or Google or Facebook, I think those assets are going to be trading on chain 24/7, 365 days a year. I don't really see a case, and maybe I'm wrong, and maybe you can help disabuse me of my false notions, but I don't really see a case for does Facebook trade on Bitcoin, or does Facebook trade on chain somehow in a digital asset space in a way that is unrelated or tangentially related to Bitcoin? I don't know. What are your thoughts? Tell me about it.
Well, in that specific use case, I mean, that's like a valid use case for a blockchain, to
Right.
use as a settlement layer for registered securities, because it's more efficient in terms of being able to make sure that nobody's hiding some aces up their sleeves or whatever, and everything is really what they say it is. Obviously, the whole entire infrastructure of Wall Street and the market makers and the prime brokers and all that stuff is a big black box that is really just a big scam. How do we know it's not a big scam? If you put it all on a blockchain and everything was transacted in a transparent way, even if it was private, then we would at least have a way to look and see that market makers aren't allowing naked shorting of GameStop or something like that, right? Yeah. So it obviously makes sense that the 1970s technology that the entire financial system runs on should be upgraded to something more modern.
Yep.
So there's no doubt about that something like a distributed ledger or a blockchain would make a lot of sense for transparency and trust.
Right.
And yeah, sure, why not have it 24/7? I mean, they can just code the circuit breaker rules right in and be allow for much more control, which is what they all want. It's a controlled market. It's not like a free open network right now. Right. And on a blockchain wouldn't make it a free open network. It would just kind of remove some barriers and add a bunch of more good things there, like we just talked about. So that could be done on Bitcoin. It could be done on a Bitcoin second layer. It could, like right now, there's the Liquid network, which Blockstream has built, and it has digital securities tokens trading on it. There's a bunch of digital securities platforms. There's The T0
Yep.
protocol is another one that's not on Bitcoin, but it's just a blockchain securities exchange. I don't think a lot of Bitcoiners, like the ones that look deeply into the other things, I don't think a lot of us are really like, there shouldn't be anything else ever use a blockchain.
Right.
It's more so that a securities token is at least honest about what it is, and
Right.
there's a way to value it.
Yeah.
And it's following the rules and the regulations, and it's not meant to disrupt anything really, because it's still, at the end of the day, a centralized equity in a centralized company.
Right.
So, that makes a lot of sense. It could be done on Bitcoin. It could be done off Bitcoin. It could be, a private blockchain like the JP Morgan's Quorum thing.
Yeah.
For sure. I don't think that's really what crypto is. I don't think that's what a lot of Bitcoiners are upset or triggered by crypto, is the securities token stuff.
No, I think you're absolutely right. And to me, I find the securities tokens to be one of the most compelling aspects of it. And that's, probably just a perspective from my own background, right? So the total asset market right now in crypto, in the crypto space, including blockchain, is about $2 trillion US dollars. The bond market, over 100 trillion, the global equities markets in aggregate, about 110 trillion. So it's significantly more than 100-fold more valuable than the crypto markets are today.
Okay, so let's look at that. I think a good, valid, fair comparison is to say, because a lot of the blockchain-y people will say there's 100 billion or $100 trillion bond market, so therefore when that all goes on Ethereum, that's going to rise the market cap of Ethereum to $100 trillion. And I've even heard people say the quadrillion dollar derivatives market is going to end up on Ethereum, and that's going to make a total addressable market cap for Ethereum $1 quadrillion.
Well, in my perspective, my opinion is that is a remarkably premature assessment, right? In my opinion, because it's just
aggressively premature.
No, it's just totally premature. I wouldn't even make that kind of speculation. It's just too far out into the future to even think about.
But look, what do you think about the idea that the idea that volume of an exchange translates to base layer token value? Because don't you think that the value accrues to the companies that are building the technology and taking the fees off of all this stuff and doing the consulting deals and they're still going to be broker dealers and stuff? Don't you think the value still accrues traditionally to the companies that are just using this technology rather than the base layer token? Or do you have a way of thinking about it that would allow you to ascribe some future value to base layer tokens the same way that, I don't know, what would be the equivalent in that $100 trillion dollar bond market? The bank market caps aren't that high. So how would we translate that logic to saying, the tokens should be worth a lot?
Well, I think that it's a combination of sovereign debt and corporate debt that brings you to the $100 trillion mark. And I don't know off the top of my head what the allocations are, but obviously it's a very diverse it's a very diverse array of different debt instruments that get you to $100 trillion. I think it's national sovereign debt, it's state debt, it's local debt, it's corporate debt, it's things like the commercial paper market. So it's a whole tremendous sort of aggregate of different things. But
but there's no way that you can actually trade the bond market, right? It's not like you have a piece of value that accrues to some token that represents the bond market. It's the value accrues to the traders, the companies issuing the bonds, the government's debt, whatever. Doesn't the value accrue to the people and the companies and the people who are making fees and the consultants and stuff like that? And why would, if we take all that activity and put it on a blockchain, why would that change? That's the argument I can never get, I can't get behind that argument that, once all this stuff gets on a blockchain, that's going to make the token go up in value. I just think it's just going to be the same thing. It's going to be there's still going to be companies. There's still going to be consultants and fees generated by all these banks.
Yeah, if I understand what you're saying correctly, I think I agree with that. I think I agree with that assessment. So basically, what you're saying is if we move, for example, the bond market, all fixed income, onto tokens, what changes, right? Fundamentally, what changes in terms of the cash flows? And the answer is probably not a whole lot in terms of the fundamentals of it. But what changes is a couple of things. So what changes is you can create increased liquidity because you can lower transaction costs. You can expand market activity 24/7, and you can create greater transparency about securities, who owns what and when and at what price. And it turns out that that turns out to be an incredibly complicated issue for things like rehypothecation of securities, which obviously, as we know from the 2008 financial crisis, turned out to be a significant negative. So the idea that you can create greater transparency, liquidity, one of the other huge challenges and one of the reasons why people are interested in doing this are all of the tremendous back office costs and time delays. It takes a very long time for transactions to clear and settle, which is something that can be a real challenge when you're trying to figure out who owns what and at what price. It creates the risk of basically of financial instability because you're not able to figure out where the ownership lies, how much leverage there is in the system, and how many times the security has been borrowed against. If you had everything on a blockchain, the blockchain suddenly solves a lot of those problems. But those are really solving legacy financial system back office plumbing problems more than sort of recreating the world in a format that is more open and less centralized. I don't know. Is that the answer to the question? Does that?
Well, I mean, it's getting there. We're talking about it. We're exploring the ideas. So that in that world where bonds are issued on blockchain, say, and there's more trustlessness or more trust, you can more transparency, I guess.
Right.
There's still corporate bonds and muni bonds and junk bonds, and they're still regulated securities.
That's right.
So there's still companies that are going to be issuing it. It's just now the technology has made the cost of doing business lower and the time to settle quicker.
Yep.
I mean, that's the whole reason they named T0 T0, because in the securities world, there's like a T plus 2 or 3, which means like time to settle plus 2 or 3 days.
That's right.
After a trade is placed to the time it's actually like there's a locate done on the share certificate and they actually know it exists and they transfer it to the proper shareholder entity or whatever.
That's
With
right.
T0, it can just be done instantly because everything is transparent and programmatic. Obviously, that's valuable to the whole industry. It makes a lot of sense. But why does that need a token? And why is that token speculated on? And why would it go up in value versus just using the technology? Because the blockchain concept is great for what we just talked about.
Sure.
But a token is just bolted on. It's not actually needed.
Well, I'll give you my opinion on this. My opinion is that the token would probably be fixed in value to the underlying security. I don't see a whole lot of cause, and maybe there are some cases, but I can't really think of one off the top of my head that makes a whole heck of a lot of sense. I think I'm agreeing with you that the value of the token would be equal to the value of the underlying security because they'd be effectively.
Well, I don't
identical.
mean the security token. I mean like the protocol token, like Hyperledger or something, or
Right.
or Algorand or Solana or any of these like next gen token DLTs. They all can do this stuff,
Right.
and a lot of them are actually thinking about how do we do it compliantly with whitelisting and like accreditation requirements and all
Right.
this stuff. So they can provide some value to these businesses and these banks and these corporations and that are issuing their bonds, and even the exchanges should be upgrading to use decentralized 24/7, not decentralized, but 24/7 exchanges, kind of like the crypto exchanges have, like Binance and stuff. Why can't you trade Apple shares and Tesla shares 24/7? It's like, this is 2021. We should be able to do that. But
Yeah.
no, I don't think a lot of Bitcoin people argue against seeing that stuff get upgraded to a better base layer technology. But when you start trying to say that because of that use case, then that means the algo token or the pick your token should go up in value to billions of dollars. That's not the actual security token. That's just the protocol token.
So why do you need the protocol token? That's the question.
Like why? I mean, because they'll make their reason for why you need the token. It's a utility token. It's a gas token. It's whatever you name it, membership token, whatever. But then that's what we're in a bubble right now where these things are going up in valuation like crazy. And that seems to be what's the market is irrational right now. And I feel like there's a huge disconnect for what the actual value of these protocol tokens are versus what the market is trading them at. Like you said, we're at a $2 trillion market cap, including blockchain and crypto, right? Like Bitcoin's $1 trillion and the rest of it's $1 trillion.
Yep.
But I don't think there's actually $1 trillion of value in crypto. It's how do you like when you think of $1 trillion in value compared to something like the stock market with like Apple and Facebook and Google, and look at all the people that they touch, the billions of people and all the employees and all the jobs they create and all the economic activity. Like crypto just seems to be a big, huge bubble to me, and it should be maybe in the billions of dollars. That's my thoughts on it. I mean, you're in the financial markets a long time. You got a lot of experience there. What do you think is going on with the valuations of all these blockchain things? And do you think that there is a case that you can make that, like in the future, we will value these upgraded layers the same way that you value a company when there actually is already companies still existing using these layers?
Well, I think the first thing I would say is that it is extremely, extremely, extremely early in this technology cycle. And to think about what this looks like over the long term is always very difficult. Do I think it's possible that there could be a tremendous amount of value realized from this? Absolutely. Do I think it's possible that a large number of the tokens that are out there could be overvalued? Sure. Could we be in a massive bubble? Yes. But it's never easy to know when you're in a bubble. And I think that, and this is some of the things that I think that the people like Raoul who come from the macro side bring to the table. They have a framework for looking at things and saying, how do we think about investing in this broad asset class? How do I understand what my risk tolerance is? How do I understand what my objectives are? How do I understand what my time horizon is? How do I understand how I size these positions? So one of the things that's really interesting is some of the macro guys who I interview all the time, and I'm just going to switch gears here and talk a little bit about how they think about stocks, because I think it's not a perfect metaphor, but it is a metaphor. When you talk to these guys and you say, they're talking about a company and they say, I'm really bullish on this. I think that it's got, a lot of room to run on the technical factors, and I'm bullish on it for fundamental reasons. And they explain their case. They make their case to you for why they own that particular stock. And then they tell you how much of their portfolio allocation is in it. And they say 1%. Now, to people who are on the digital asset side, they're like, really? Wow. The people who are on the digital asset side, who are on the blockchain side, the Bitcoin side, have this tendency not to buy at 1%, right? They're going all in. So it's something that's an interesting perspective. So one of the reasons that I think that people from the macro side have more risk tolerance is because they're very used to taking very small nibbles at things. And to know that, like, hey, yeah, I'm going to invest in a thing and I'm going further out on the risk curve. Raoul talks about this very eloquently when he talks about how his own asset allocation is done. Like his core investment is in Bitcoin. I think Bitcoin is his largest position. Don't quote me on that, but I think Bitcoin is his largest position. I know he's very constructive on Ethereum. I know he owns Ethereum and he really likes it. But he talks about other things when he goes out. He goes, I'll just dabble. Like, it's not like he's going in and not recommending, he would never, we don't give obviously recommendations or financial advice, but I don't think he would say it's a good idea for people to own 50% of their portfolio in Ethereum. I mean, these are people who are taking very measured, very small bites. And I think that that's something that probably causes some confusion between the digital asset crypto side and the macro side is just how small their positions really are. Relative, and you spread your bets out because you don't know what's going to go up and what's going to go down. There's a sense of the uncertainty about asset prices. And I'm very, look, I really feel like, and I say this all the time on Real Vision, right? Constantly drone this on. Like, this is not financial advice. You need to talk to a financial advisor to understand your own objectives, risk tolerance, position sizing. All of those things are something that people should not ever do by listening to advice on the internet.
Yeah, I know, but that's what people do, though. Like, we're in a world where people just see the tweet and they just don't even read the article, and they're just like, well, I guess I'm going all in on Definity tokens because Raoul Pal likes it now, even though he doesn't own it. He says he doesn't own it, but someone sees that and is like, oh, but he talks about network effects all the time, and if he's talking about Definity now, I'm going to get in Definity before Raoul Pal does and start shilling it to all the Real Vision crypto subscribers. And then you get this army of people start just going all in on these bags, trying to like front run the network effects of like what the big traders and funds do. That's why a lot of the DeFi whales just are quiet all the time and they don't say anything. They just kind of like lurk around in the background, taking big huge positions of things, and then they have whale watchers or whatever where they watch the wallets and they see where they're moving their liquidity, and then people go and follow it. But everybody is not everybody. I mean, there's a bunch of crypto Twitter people that are always shilling stuff. So it's like, obviously you guys as a media company are not doing the same sort of thing as like BitLord or something on crypto, who's like getting tattoos of his bags and telling people to go all in on his bags. But it kind of, I don't think it really has a much different of an effect on the average crypto investor, because like they're just young and they're high risk. Yeah, I just think that a lot of the way that I think it's going to shape out is obviously two ways. One of two ways. It's going to, a lot of people are just going to get wrecked and the bubble's going to pop, and then Real Vision crypto is just going to kind of like fade away and you go back to Real Vision content and then just covering the financial markets. If we're in a Great Depression 2.0 or something like that, no one's going to be caring about Chili's tokens or NFTs or whatever, right? It's just going to be back to like the real stuff. But then there's the other scenario where they're just gonna have to keep pumping money into the system, and then in that world it just opens the door for speculation to continue. So I can see how the crypto market can just keep going for another couple of years, just like the stock market will, if they just keep printing trillions of dollars. So yeah, in that world, like Real Vision crypto might be worth a ton of money, and you guys might be able to exit that to like some big company or something like that. And then I don't know. What do you guys think about it? Are you preparing for both of those scenarios? Like, how are you thinking about it?
I don't think about the exit at all. I'm in this, because I love to do what I do and I get paid a good salary, and I'm not thinking about exiting. I'm not a founder of Real Vision. I don't have founder stock. It's
oh, you should be.
Well, anyway, be that as it may. Look, the reality is, here's how I think about it, the bigger picture. Let me talk about that, and then we can come back to Real Vision and how I think about that. So I was fortunate enough in the late 90s to be one of the young guys on Wall Street, and to be there for the .com bubble and bust.
How old were you when that was?
I was like 26, 27. I was a kid, and I was working at Credit Suisse. I worked at a startup that was wholly owned by Credit Suisse Private Banking called Streetline. And this is back in the 90s. This was before the euro. And one of the things that we were building, in fact, our primary product was an international multi-currency equity trading system. So that if you were a high net worth Italian and you wanted to buy stock in France on the Nouveau Marché, you could switch your lira for French francs and execute the transaction. It is incredibly early. I mean, this is a totally different world that we're talking about 21, 22 years ago. And we saw ridiculous bubble pricing. We saw things like pets.com, people, as selling $20 bags of kitty litter that were 40 pounds that had to be shipped from somewhere in the valley to New York City. It didn't make any sense. There were a huge number of dramatically overpriced companies because there was too much money chasing lots of, frankly, terrible ideas. And there was a boom and there was a bust. to me, when I look back on that, I see some metaphors for where we are today. And look, I don't know what the price of any coin is going to be tomorrow, next week, next year. I believe very strongly with every fiber of my being that if we're having this conversation in 2031 or 2041, we are going to see a world that has a far more technologically connected and largely more decentralized infrastructure that is creating the basic commerce payment rails, ability to place conditionals in the form of smart contracts or other aspects into a network of value. Now, it's my opinion that Bitcoin is going to play a very prominent role in that network in terms of being a digital gold store of value function, a pristine collateral function. But I'm totally uncertain of what that's going to look like. And, you know, I believe that the direction that this is going is just straight up in terms of the implementation of all of these technologies, right? I really fundamentally believe that that is going to be the case. But the price, the valuation, where it's going to be tomorrow, next week, next year, I am aggressively neutral. I don't speculate about that, and I certainly would never tell anyone, to invest. I mean, I don't give financial advice. I never will give financial advice. I'm not a financial planner. I am interested in exploring how these underlying protocols, how these underlying technologies work so people can understand the world that we're moving toward. NFTs is another classic example, right? So NFTs, when people use the phrase NFT, what they're generally talking about here in 2021 is the collectible, right? They're talking about the $69 million Beeple investment in the digital painting that he made. And to me, that's not what NFTs are really about in terms of their promise. The promise of an NFT, Bitcoin and dollars are similar in one sense. They're fungible. If I have a $100 bill in my pocket and you have a $100 bill in your pocket, we're happy to swap. We don't have any preference. We don't have any attachment to them. If you have one Bitcoin and I have one Bitcoin, we can swap the Bitcoins and it's economically neutral and we don't care which Bitcoin we own. The idea of an NFT, to me, what makes it so fascinating is the capacity to have a digital fingerprint so that you can issue a whole series of tokens and then have a digital fingerprint where everyone is unique. Why does that matter? Because it gives you the ability to do really interesting things in terms of creating these programmatic frameworks for doing things with capital structure. So you can tokenize just about anything. You can tokenize real estate. You can put in conditional smart contract style securities. You can do convertible debt to equity instruments. That's what really interests me because I think that's what the future looks like. I think that's what the future of finance looks like. And I think that's what the future of commerce looks like. Now,
yeah, but then we get back to the same argument though, Ash, because it's like, I agree with you, just like on the securities token example, that the technology can provide benefits to the companies building on this,
right.
Like the idea that a cap table can become an NFT, a suite of NFTs, and you can trade them around to other accredited investors. That is cool. Like that makes sense. But these are also monies at the same time. Like they're also traded on open markets that have no regulations and have no AML KYC requirements.
Yeah.
So it's like, I think when the regulators do decide that they're going to step into this, because it is starting to get pretty big.
Yeah.
I think then a lot of that speculative excess value that we're seeing right now is just going to be kind of flushed back down to reality. Because just because you can have a piece of or a tokenized real estate NFT, that's cool. And I can put it in my digital wallet and I can sell it to somebody else. But these things are being traded at like 10x, 20x, 30x, 40x, their fundamental underlying value.
Sure.
In a lot of cases, there's really no way to value what's fundamentally underlying, because it's just digital art. Like you said, like it's kind of,
right.
I think of them as digital Beanie Babies right now.
Right.
But the technology can do a lot of stuff, but when you're valuing it, right now, it's like these things are but so are stocks. Like stocks are way
Yeah.
overvalued. So
Well, listen. So what about the art market? What about the $100+ million sales that we see on impressionist paintings? These are markets fluctuate. Risk assets vary in price, and I think the same is true of Bitcoin. The price of Bitcoin, I expect that in the long term it's going to rise, but it can also fall. It can fall in the short term. It can fall in the intermediate term. There's probably a case for the possibility of it falling even in the long term. That's not what I would think is my core opinion, but there's tremendous uncertainty in these markets. If people are looking for certainty, markets, whether they are the capital markets, the digital markets, the crypto markets, that's not the place you go for certainty, because prices rise and fall based on factors that have, in some cases, nothing to do with the fundamental value of the underlying asset. Things like liquidity, positioning risk, leverage, all of these things makes asset prices bounce around. And it's almost like if for people who are in these markets, it's like you can't expect the ocean to be flat. The ocean is always going to be the ocean. And that's why it's so important for people to get educated and to understand that asset markets are inherently volatile.
yeah,
And that's why it's also important for people to talk to financial planners and not get advice from the internet about investing, to say things like, okay, well, how much of my assets should be in an FDIC insured bank account versus what percentage of my assets should be in stocks? What percentage of my assets should be in digital assets like cryptocurrency? How do I think about positioning between other digital assets and Bitcoin? These are all questions that no one on the internet can answer for you, because they're individual. They're about your own needs and objectives and risk tolerance. And that's why it's so important for people to get professional advice about that. And then to go and find interesting analysis of the way things work so that that can inform their opinion and inform their views.
Yeah, I agree with the fact that Bitcoin is also volatile, and there is a potential that we could see a world in the future where governments crack down so hard on cryptocurrency and blockchain stuff that they strangle all the endpoints. They close all the Bitcoin exchanges. They spam attack the network. They just use the money printer to just print trillions of dollars to just kill Bitcoin and make it unusable.
How about they co-opt hardware and software manufacturers to build in technology that can throttle the network? Listen, my guess is that, and this is a guess, this is an opinion, I don't think that happens. I really don't think that happens. I think the far more likely scenario is that Bitcoin gets brought in to the traditional AML KYC framework. It gets brought into a framework so that there's greater transparency for tax reporting. I think that what happens is that the system of the existing system of laws and regulation basically includes Bitcoin in it. That's what my view of the future is. But listen, these are statements that are forward-looking. This is about the future. I could be completely and totally wrong, right? And I think that's one of the things that being in the macro space teaches you, is that you always have to believe you could be completely wrong.
Well, in that scenario, right, I think the thing that I was describing about how governments could make that game theory decision to want to kill Bitcoin by printing money and attacking the network by trying to take over 51% of the network, or just fee attacking the network. That is I think on the scale of likelihood scenarios, that's like the most unlikely scenario that could happen.
Yeah.
And I think that the most likely scenario, if governments, is what you just described, but I think that they will fail with Bitcoin. Like if they try to completely take over the Bitcoin network and make it integrate with their digital central bank currencies and make it so that it's completely KYC AML compliant, that I think is where Bitcoin succeeds that attack. And I think it's the only cryptocurrency, aside from maybe some of the other ones that are just trying to compete with Bitcoin, like Monero or something like that, where I don't think it's going to succeed in price, but it could stay up as a network, Bitcoin, if the government, it's not if the governments, it's when the governments start to really enforce FATF rules and FinCEN rules and SEC rules. The thing about DeFi is they're all using stable coins. a lot of the significant majority of the collateral in DeFi is USDC and USDT. It's just stable coins. It's like, I don't know, 70% of the collateral in Ethereum DeFi is stable coins. That's dollars in someone's bank account. That's not decentralized. And that stuff is what I think all these FATF regulations are trying to. I mean, look at what they did with Facebook. When Facebook was they have 2 billion whatever users. That's a real threat to the US. So they called them in front of Congress. DeFi is now getting to a level where it's actually significant. The volume sometimes overtakes the centralized exchanges, but it's kind of LARPing right now. It's going out and pretending that it's DeFi and it's disrupting the regulators. The regulators are not being disrupted. They're just taking their time. And by the looks
by the way, that statement, I completely agree with that statement. And DeFi to me, so I'll give you a few words about my take on DeFi. So first of all, until very recently, so Sebastian Munjava, who is the person who covered DeFi for Real Vision, spent most of his time thinking about DeFi. And so as a consequence, that was not one of the areas that I spent a lot of my time on. So I'm certainly far from an expert on DeFi, but I agree with you. And I believe that there is going to be a regulatory moment where regulators in the US and around the world are going to look at DeFi, and especially as it gets larger and larger, as you point out, I think it is going to either going to have to meet some of the basic regulatory requirements, or I think it's going to be a very interesting moment for what happens. And I have, of everything in the space, I have the most uncertainty about DeFi. I think that in principle, it's a really fascinating idea. And I think it's intriguing to me intellectually. But when I think about how does DeFi begin to integrate with the existing legacy financial system, the legal and regulatory compliance infrastructure, I think it's very much an open question.
Yeah, well, it's like pretty likely that if DeFi is going to succeed, it has to integrate with the traditional system. Like the banks, the central bankers and the Wall Street, elite crew are not just going to like bend over and allow these Silicon Valley guys to come and just say, "Oh, well, I guess you decentralized us." They're not going to like give them the keys to the money printer and just say, "Here you go, guys. You can control the financial system now. I guess we've been disrupted." They're going to enforce the rules. And in terms of them trying to do this to Bitcoin is outside of the system. Bitcoin is a network of monetary value. And you mentioned a couple of times you think it's going to be like the winner for store value, but with things like the Lightning Network and even other networks that are being developed for like layer 3, Bitcoin can run and serve millions, hundreds of millions, billions of people outside of the traditional rails without needing stablecoin integration or anything like that.
Yeah.
That's the idea. That's the dream, that the original idea that Satoshi had was that we can have a new currency, and it's a native internet currency. And it seems like what's gone on in DeFi is that Gemini, Coinbase, Circle, all these big companies are just trying to like put money on an open blockchain. And I think that might end up being the Achilles heel of this whole decentralization idea, because it's not decentralized. It's dollars in a regulated institution's bank account, and they're going to have to comply or they're going to go to jail.
Yeah, no, I think you make some very good points there. I suspect that what we're going to see is going to be a world that is actually, I think regulators are actually going to be perhaps maybe more friendly to this space than maybe you suggest. I think that it's just going to be there's going to be a process of understanding and trying to figure out how people do this compliance reporting, AML, KYC. But I think that that's something that can largely be solved. I think that regulators have been pretty actually embracing overall of the technology. And, regulators don't embrace things by coming out and telling you they love you. They embrace things by not taking draconian action to stop them. I think there's a feeling, and the people who I talk to in very sort of high-end Washington policy circles, I think there's a feeling that ultimately the United States is better off doing this innovation onshore than having it happen somewhere else in the world, like China. And I think that there's a feeling that innovation, technology, overwhelmingly has been a net positive for the U.S. economy, and that it's something that people would like to see continue. I just think it's a question of figuring out how nation states begin to embrace and understand and negotiate these compromises with themselves, with their citizens, with companies that are headquartered in their territories. And I think it's going to be a journey. It's probably going to be a bumpy ride at some points, but I really suspect, and maybe this is just like my own optimism, that these technologies have the potential to make the world a better place. They have the potential to make the world more decentralized. They have the potential to reduce frictions. They have the potential to facilitate commerce, and they have the potential, ultimately, I think, to empower individuals. And I think it's a good thing to have a store of value that is independent of what's directly under the control of regulators.
Do you buy into the logic that people like, the Bitcoin philosophers like Robert Breedlove and Jeff Booth and Preston Pysh and, all those folks that have been on Real Vision in the past, that believe in the idea that it's going to kind of bleed into Bitcoin, and then Bitcoin will eventually become not just a store of value, but even what Raoul says about a pristine collateral or whatever, where it becomes the measurement, it becomes the unit of account, not just the store of value, but the unit of account, and then the method of exchange in sats. Do you think that's likely, or do you think it's going to be stable coins and decentralized digital central bank digital currencies more likely? What do you think?
Too early to say. I think that if that does become the case, it's a very long-term proposition. It's not something that happens today, tomorrow, next week, next month, next year. I think that if it does happen, it's something that's going to happen over decades. But I think it's most likely to become a pristine asset, pristine collateral. Look, what makes, one of the great sort of, I think, circular debates is Bitcoin money. Like, I hear people argue this point. It's kind of like, well, it depends on how you define it, right? Like, it's like, this is just kind of like almost like a dorm room debate. The reality is that Bitcoin has tremendous value. It's something that there's a lot of demand for. It's something that the price has risen very dramatically, but it is not legal tender, right? And what makes legal tender is the fact that you can extinguish debts in it in a way that the state regulates. And even more specifically, and some of the MMT people will say this, is that you can extinguish your own tax debt to the federal, state, and local government in US dollars. And for that reason, there's always going to be demand for US dollars because you can't pay your taxes in Bitcoin. And it's not very likely that you, in my view, that in the future, near or distant, that you will be able to pay your taxes in Bitcoin. Because as you pointed out, states want to have that capacity to be able to do things like control the money supply. Now, I'm someone who is, I sort of have a very broad kind of philosophical background, and I certainly find Austrian economics to be in many ways incredibly enchanting, but I also see some of the value proposition in Keynesianism and neo-Keynesianism, which is it's understandable that states would want to regulate economic activity because when there are things like the Great Depression and there's a general trend of downward economic spiral, you want to have the ability to take policy action to stimulate the economy. And conversely, if there's too much heating up of prices, you want to be able to have the facility with central banks to begin to tamp down some of that price expansion, price volatility. Now, none of that is to say that I think that the course that the Fed has been on for the past several years has been the perfect one. We know, and I think this is something that people in the Bitcoin space are very passionate about, is that there's been a tremendous amount of inequality that's been created in America by the fact that asset prices, especially U.S. equities, especially stocks, have increased dramatically in value since the great financial crisis, 2007, 2008, to today, while wages have remained incredibly stagnant. And I think there are a lot of people who are in the Bitcoin space who speak very eloquently about the potential for Bitcoin, in their view, to alleviate some of those inequalities by giving people the capacity to hold on to a store of value that is independent of that system. And I totally get that, and I understand where they're coming from. But I do think that states and central banks have an interest in doing things to smooth the flow of the business cycle, and I don't think that that's all negative. In fact, I think and the data suggests that since the 1890s or so, when we've been collecting this data really closely, that central banks and fiat money has had the ability to be a net plus for economic growth, especially in the United States.
Yeah, that's a question I always the topic that I always kind of struggle with, because I'm not a deep knowledge well of all the previous history of when we were on a gold standard, when we weren't on a gold standard. I'm trying to continue to learn about that. I read the book. It was about the founding of the Federal Reserve.
Oh, The Creature of Jekyll Island.
Not Creature of Jekyll Island. It was another one. It was I can't believe I'm blanking on it. I don't know. Some book. But it was basically it felt like propaganda, the book, but it was telling the story of how the Federal Reserve came to be from these European bankers that came over to the United States. And the United States was on more of a decentralized banking system back in the late 1800s. And they made the case that the bankers were manipulating the economy so that they could centralize power into a central bank, because there were central banks in Europe, and that was the way it's been done in Europe for a long time. And this decentralized banking system that was in the United States allowed it or didn't allow them to have the centralized controls to be able to raise the interest rates, lower the interest rates, print more money, issue more debt, take away debt. It was all decentralized. So there was the case made that they don't know whether or not it was a net positive or a net neutral or a net negative, because it's hard to tell, because you don't really have data to see what would have happened if they didn't go off the gold standard.
Right.
Yeah, I guess all we can do is kind of look at what has happened based on the decisions they've made, and it's not maybe if we could maybe say that if they had more restraint and allowed the market to be more free, then there might have been a bit more economic hardship during the 70s and maybe in the 2000s. But maybe now we'd be in a much stronger place fiscally. Yeah. And everybody, all the citizens, would be stronger, but maybe it would have taken longer to get out. So it's hard to say whether it's net negative or net positive or net neutral, but I can't really see how it's net positive.
I'll give you, first of all, I'm not a macroeconomist, and my knowledge of monetary policy is, by macroeconomist standards, pretty shallow and cursory. I think that people who are advocates of central banks will say that the data that we do have suggests that if you look at, especially in the US, aggregate economic output and health was better during the period of the central bank than before. I know that's disputed, but it seems that the data suggests that that's the case.
Right, I hear that too, but then that one is always combated with, well, is that the effects of the technological innovations, or is that the effects of central banks dishing out more money to put into investing into more innovations? Versus,
my understanding is that there is data that shows that it is in fact a real effect, that when you control for things like price illusion for nominal expansion, basically looking at the nominal values of things, there is real data that shows that during the gold standard era, that there were a great deal more boom and bust cycles, and that recessions were harder to escape, and that standard of living did improve much better during periods when there was a Federal Reserve. Now, all of that is not to say that this particular Fed or any particular Fed policy is the right one. In other words, you can believe that that the central bank is a net positive for the U.S. economy, but still believe that they have pursued the wrong policies, particularly since the great financial crisis. There are certainly many people who believe that. I'm skeptical of the Fed, but I'm probably a lot more favorable and positive about the Fed than most people in the crypto space or in the Bitcoin space. I would say, in my view, and this is just my opinion, if you want to really understand why the Fed has done what the Fed has done, and this is again just my opinion, it's the failure of other branches of government. Right? We have tremendous division in this country. We have tremendous partisanship. We have a Congress that is very often appears to be intensely dysfunctional. We have two political parties that have a very difficult time agreeing on the time of day. And so in my view, what happens is you have, whether it's the global financial crisis or during the COVID period, you have a board of governors at the FOMC, the Federal Open Markets Committee, that's 12 men and women who sit down around a table, and whether you agree or disagree with their decisions, they're probably pretty nice collegial people, and they can sit around and they go, the world is on fire. The world is burning. We have this terrible pandemic that's gripping the world right now. What are they doing in Congress? Well, they're not really doing a whole lot of anything. Jay Powell, I think to his great credit, always comes before Congress and says, you need to act. You need to take action. You need to do things on the fiscal side. You need to do what you need to do to make sure that people are not dying of hunger, or not whatever the challenges that they face. You need to do something here. And then the Congress debates and nothing gets done. And at the end of the day, the reason the Fed is very much like the fire department. When the building is burning at 3 o'clock in the morning and you call them, they pick up the phone and they show up with the red engine and they hose the place down and get the flames under control. What should really be happening is a different branch of government, like the building department that certifies things, should be making sure that things are properly fireproofed, that the building codes are being followed, that people aren't cooking on a balcony in a wooden structure with lighter fluid if there's a 10-story building. And we're not doing that. And that's really the problem. The reason, in my opinion, and I think that this is something that people probably don't hear enough, is that the reason that the Fed has to take the kind of actions it takes, buying these huge blocks of assets, changing the valuations of equity markets, is because there are other places where the government, where the culture isn't working, because the country is at each other's throats. And that is a problem that is unfortunately not something that can be solved in the Fed. And it's not something that I see, Democrats and Republicans coming together and singing Kumbaya and figuring out how they can solve their problems together anytime soon.
Well, that book I was thinking of was called America's Bank.
Yeah.
You heard about that one?
Yeah, that sounds familiar.
Yeah, it was a good read. It was
I'm Googling it.
Tushar Jain, actually, from Multicoin Capital. I shared a cab ride with him coming back from one of the Satoshi Roundtable events. And I trolled him on Twitter so much, he blocked me. And then we shared a cab ride to the airport. So we had a good conversation. He suggested that book, because I was talking to him about this.
Did he unblock you after the cab ride?
He did, yeah. And then I trolled him a couple more times after that. I don't know if I'm blocked or not. He probably just muted me.
What's interesting is the guy who wrote that book is Roger Lowenstein, who I believe has been on Real Vision. And the book that he's most famous for, other than that one, is a book called When Genius Failed, which is about a hedge fund that collapsed called LTCM. And this is something that was back.
Called what? You kind of went out there.
LTCM. Oh, LTCM. Long-term capital management. And this is one of the one of the most famous hedge fund failures in the history of U.S. finance. It is, I guess it was back in the late 90s, like 1998, I think. And this hedge fund famously collapsed. And what made it so notorious is that there were two Nobel Prize winning economists who were helping to run the place, including Myron Scholes, who created the Black-Scholes model. And the idea of the book, When Genius Failed, I read it a very long time ago, is that, it's very difficult when your models break, when you make a little mistake, when you don't actually account for the way human beings act, when you expect asset prices to be tightly correlated and they jump out of the spread and you get a lot of leverage in the system, really, really, really bad things can happen. And, that in many ways is the fear that people feel around the Fed, which is, what if the model is wrong? What if there's a risk in the system that people haven't thought about? What if there's just too much leverage? What if there's a point where the balance sheet continues to expand and expand and expand, and there's a certain point where it breaks? That's a risk. That's a risk. And I think anybody who tells you that it's not a risk is not being fully honest with themselves. Now, does that mean that it's, the world is going to fall apart tomorrow? Well, probably not. But it's something that I think smart people should be thinking about. That's
also there's a bit in James Rickards, one of James Rickards' books about LTCM. He was a chief accountant or something like that at LTCM. He's the guy that wrote the Currency Wars book, and then a whole bunch of other books, the Road to Ruin, and he's a big gold guy.
Yeah,
and he told the story about LTCM and how he worked there and the meetings with the central bank, like the Federal Reserve and Wall Street banks. And, he talked about that and contrasted it with the 2008 crisis and kind of made a parallel to how Lehman Brothers didn't participate in the bailout of LTCM, so that there was a vendetta against Lehman Brothers in the 2008 collapse. And that's why they kind of let Lehman fail, because they didn't step up in the LTCM crisis.
Yeah.
Which, it kind of like, and then you watch things like The Big Short and Margin Call, and you look at the documentaries like The Inside Job, the one that was done about the 2008 collapse. And it's hard to sort of like, those aren't conspiratorial. You can go and see like the really conspiratorial documentaries about, on YouTube and stuff about like how this, like, they get together and they do rituals and they control the world and all that stuff. Like, that's okay. Sure. You can go watch that. But then when you actually just watch real information about how the Federal Reserve works and how Wall Street works, it's really hard to justify as a normal person that hasn't worked in finance, like why this isn't a big scam and how this isn't like bad for regular people, because it seems like obviously the people that keep getting the most benefit from all these Federal Reserve actions are the rich people, the people who cause all the problems in the first place and take too much risk, and the central bankers and their friends, and that whole like 0.1% elite class that get the benefit of the money getting printed to them first. So it feels like, it's like, I'm not like a typical Bitcoin Austrian economist sort of like leaning person where I'm like, I know the answer is a sound money central bank, because I'm Canadian and we have like a healthcare system here, and I kind of see some of the benefits of some social programs and having a safety net for people. And I like the idea of a UBI and stuff like that for people who are their work is being disrupted. And so it's tough for me to kind of like take one side or the other, but in terms of like an absolute, but I definitely think the system that we have right now doesn't work. And thank God we have Bitcoin, because it allows us to kind of like opt out of it and protect ourselves from these people. Because Ash, what do you think they can do now? Like, they can't stop this path they're on. They can't raise the interest rates, right? They can't stop printing money. They can't actually go back to sort of a normal, regular free market anymore.
It's a great point, Brad. They definitely cannot do it, I think, in the middle of this pandemic. They started to raise rates a bit. They started to unwind the balance sheet a bit prior to the pandemic. They were moving in that direction. It seemed like that was going to happen. Jay Powell, I think, came into the chairmanship of the Fed with the best of intentions. He really wanted to normalize monetary policy. In fact, many of the more Austrian traditional kind of strong money people were really supportive of Jay Powell. They thought he was their guy. He was going to do a great job. He was going to raise rates. He was going to unwind the balance sheet. And then it was like he found himself stuck in the system. And he looked around and people said, Mr. Chairman, if you start doing those things, there's going to be some consequences. And I think he quite admirably held to that path and did begin to reverse the trajectories. First, it started to just decrease the second derivative, the rate of expansion, and then started to actually, the balance sheet began to shrink a bit, and rates started to rise. And then we unfortunately just got this absolutely hellish, horrific, pandemic that basically changed everything and forced the Fed back into the position of, basically expanding and becoming more accommodative once again. So, to your point, as I was talking here, I was looking at the chart of the Fed balance sheet, and you can see it starts to, it's basically it hits that $4.5 trillion mark around 2014, and it goes basically sideways until 2018, and then you actually can see it does start to unwind a little bit between early 2018 and late 2019. And then you get the pandemic, and it starts to expand at a much faster rate. The line just goes straight up in the air. It's really ugly.
Oh man, it's like it's exactly correlated with the price of Bitcoin if you overlay the charts.
Yeah.
So in 2018, late 2018, it did feel like they were going to try to reverse policy a little bit. They had the biggest percentage, not points based, but like percent raise of the base interest rate.
Yep.
In history, they raised it. What was like half a percent or something, but even that alone was like a massive percentage raise based on previous troughs and valleys or whatever in the base rates, and they did that, and the stock market just freaked out. And there was a bunch of people saying back then in late 2018 that this is proof that the banking system is still super highly leveraged, super high risk. The money is still over levered, and there's a bank out there that's insolvent, because that's when the repo market shot up. The overnight lending repo market thing shot up. And then they immediately reversed course on all that stuff and opened up the Fed window or the repo window to say here, anybody that needs whatever you want, we'll give you the base money. You can just take it, meet your debts, whatever. And there was hundreds of billions of dollars just bailed out there to whatever banks needed to borrow money. And then in the pandemic, they actually just canceled all the Basel Accord requirements. They just said they don't apply anymore. You don't need to have any liquidity reserves. You don't need to meet any unexpected cash flows. We have unlimited money. We got the bazooka. You can have whatever you want. So how is that healthy? And how does that give people confidence that the banking system is not teetering on the edge of collapse, and that money itself, like dollars itself, is on the edge of collapse?
Well, I guess the answer is we haven't had hyperinflation, and we haven't had a collapse of the currency. We haven't had a collapse of the U.S. dollar. It's obviously, DXY has declined from about 101 to about 91. So it is declined. Some of which is
what does that indicate, that it's declined from that 101 to 91?
It indicates that the U.S. dollar is less desirable against a basket of international currencies, especially the euro, in terms of the weighting of DXY. But it indicates that the dollar is weakening, and it indicates that that there is some potential for future declines. Now, you don't. There are reasons why a currency that's too strong becomes problematic as well, mostly because it has an impact on your ability to export goods at a competitive price. But I think that there is people who are looking at this going, "Ooh, well, that's a little bit not so great." It's potentially a little bit of a warning sign, but it's certainly far from a collapse. It's certainly far from the currency market saying that there's no demand for the U.S. dollar and that no one wants to hold our debt. That's not the case. It is reasonably stable. It's just a bit of a leg down. Now, obviously, that could continue to deteriorate. Future is always uncertain. There are no easy answers here. And it's really challenging, especially with COVID, right?
So it's not so bad. Obviously, it's not, like you said, it's not hyperinflating. And I think the definition of hyperinflation is something like 10% month over month rise in prices, or is it 20%? So it's 10 to 20% rise in prices every month. That's like the definition of hyperinflation, I think.
Yeah, and we're just to be clear, we're nowhere near that. We're looking at, like being around 2% per year.
Yeah, but let's talk about like actual inflation though, not like CPI inflation, because CPI is just the same as looking at unemployment stats. Like they actually remove a lot of the worst, factors from the official unemployment stats. That
Right.
If you stop looking for work, you're no longer included in the unemployment numbers.
Yeah.
Which is kind of silly. It's like the same as like, well, let's not put healthcare in the CPI because that's gone up 5x, but
you are actually counted as someone who is removed from the labor force. So it isn't like you're entirely. I agree with you, by the way. I'm not disagreeing with your broader point, which is that it can be a little bit misleading to look.
How do you measure like real inflation, like actual inflation? How do you think about it?
It's a damn difficult one to do, is the short answer. First is the definition of inflation, which is it's seen as a general rise in aggregate prices, and it's a really hard thing to quantify. So we've seen dramatic asset price inflation. Look at the 5-year chart of the S&P 500. Assets have gone through the roof. Look at the price of commodities over a shorter time cycle. The last 6 months, we're seeing increases in price. There are different measures of inflation. You can look at CPI. You can look at PPI, Producer Price Index. You can look at PCE, which is supposed to be a more it's the Fed's preferred measure of inflation. But the reality is that it is something has happened in the economy that makes it much more difficult to quantify, because there's been a lot more fragmentation over what prices actually look like. So the two places in the economy where we have dramatic price inflation right now, really, I think, impressive price inflation, are in the
NFTs.
cost of healthcare.
Yeah,
different one. But look, I'm talking about things that impact mom and pop, people that really hit people on Main Street. If you talk to regular working people in the United States, it's the two things that they talk about, and they're absolutely right. The data shows it. So it's like the wisdom of citizens is that people are terrified about the cost of healthcare. They're terrified that they're going to get sick. They're terrified, even healthy young people, somebody who's 25 years old, a guy or gal goes, what if I have to get my appendix out? I don't have health insurance. What's it going to cost me $50,000? And the other thing that people are really feeling in a very painful way, and I think it's a huge challenge for the society, is the massive inflation in the price of education. Because if you aren't able to, get that credentialization, that, look, let's be honest, it's really not a whole, really that important, but if you want to get a job, you need to go to college. It's a terrible thing that we are in this country right now, this mentality where people who are not able to send their kids to universities don't have an opportunity in the labor markets because they don't have the thing that's seen as table stakes. I think it's horrible. I think it's appalling. And student debt is completely out of control. The costs of education are totally out of control. So we have dramatic inflation there. And yet at the same time, the price of other things is falling really dramatically. I'll give you an example. For people who watch Real Vision, they know that I am not exactly a clothes horse. I am not like a schnazzy dresser, right? Like I put on a button-down shirt and I go on camera. The other day, I was looking at my closet and I was like, man, you're on camera all day long. You should probably buy some new shirts. So I go on Amazon and I want to get the numbers right. I bought 7 shirts for like $128. 7 shirts for $128, and they were delivered to my door. Right? That's not inflation.
Yeah, that's not a lot. That's not bad.
It's dirt cheap, right? I mean, that is extraordinary, that the price of that you can get things that inexpensively. A full men's business wardrobe. Like now that I don't leave the house, it's a whole wardrobe, right? You can't see right now. I'm wearing running shorts. All right, and I'll crank the camera back since we're on, and I'm wearing Crocs, which I always wear during. This is my business casual, right? So I basically bought a full year's business wardrobe for $128, right? And why are those prices falling? It's two things. It's technology and it's globalization. And so you have areas of the economy where prices, apparel, if you look at the charts, you'll see that apparel, there's dramatic deflation, right? It's the prices are going down.
Chocolate bars too. The price of a chocolate bar hasn't changed in like 15 years.
Right. And as the value of the dollar decreases, I remember when I was, when I was in my 20s and working at Credit Suisse, I probably bought a shirt for $130 when I was, 26 and cared about the way I looked a lot more than I do today. And now you can buy 7. It's pretty extraordinary that, like, you see the prices of those things falling. So measuring inflation, I think, is a really complicated question. The price of food is definitely rising. And I think that really impacts.
For an example, I just bought some ghee on Amazon, some bulletproof grass-fed ghee, because I do the bulletproof coffee thing where you put the butter or the ghee in your coffee. $50 for a thing of ghee. But I'm Canadian dollars, so you got to apply the multiplier to that. But that's probably like $30 American. I probably could have got $15 or $20 if I looked for the non-grass-fed stuff. But still, I mean, that's an insane price.
Yeah, that's crazy. That's absolutely wild. All right, so I'm a stickler for data. So the total cost that I paid was $130.91, including tax and delivery, and I got 7 shirts. Yeah,
that's a pretty good deal.
It was a ridiculous.
You should start a new show. Ash's Amazon, and you can help people get deals.
The cheapest shirt was $15.11 delivered to my door. Right.
Well, so for sure we definitely have some things that have been staying the same price.
Right.
But I looked at my power bill recently. My power went up double in the last 10 years because I was mining Bitcoin in 2011 and I had an old power bill laying around just for the fun of it. I had it like stapled onto the wall in the basement where I was mining. And I remember when they upped my power, because I was using so much power that they like put me onto like a commercial tier because I was using too much power. And even then, when they jacked my price up to the commercial rate, I'm paying almost double now the residential rate it's been 10 years. So like, for sure, some things have gone up in cost, and you said it, like assets, like my house has also doubled in price, and I'm in a small town in Canada. So imagine if I was in a city, like that would be 5, 6, 7x sometimes.
Yeah. Pretty good if you own one. Pretty bad if you don't.
Yeah. So for sure, rich people and wealthy people, middle class people that were deployed into assets and have assets are in a like on paper doing better. Yeah. And most of the middle class folks are just leveraged up to their neck in debt to have the assets.
And it's also generational. If you were someone who's maybe in your 50s and you're a married couple and you've done pretty well, you're a professional, you're an engineer, you're a doctor, you're a lawyer, and you bought your house and it went up. If you live in a city, if it went up 3 times or 5 times or whatever the number is, you're feeling pretty good. But if you're that couple's 22-year-old kid and you're paying $1,500 to live in half of a studio apartment somewhere in downtown Manhattan, you're not feeling too good about your outlook for the future, right? And that's unfortunately the place where we're at right now, where you feel, you can feel when you talk to people in their 20s the uncertainty that they face, and I think one of the reasons why that they're so interested in embracing digital assets, embracing Bitcoin, when it comes to things like inflation, and Brad, this is like a perfect example of like why I always want to have, my job is to always be the dumbest guy in the room, right? When I'm talking about inflation, I want to have a person on who's like literally, been studying it for 20 years. They worked at the Department of Labor. They've got a PhD in economics. But the thing is very clear is that the definition of inflation, the idea of a generalized increase in price, in my view, my opinion, is that's breaking down. Because you see things like the dramatic collapse in the price of apparel. The fact that you buy a business wardrobe for $131, but the cost of your healthcare is just crushing. Mm-hmm. The fact that you're paying these ridiculous numbers to go to school and get your college degree, and then go to graduate school, and you're amassing this huge amount of debt that's going to follow you around for the next 20 or 25 years. That's real. And that's something that people are feeling genuine pain because of.
So we can't they can't raise interest rates. We talked about this already, and we're seeing some inflation. We're seeing dramatic inflation in some places,
Yeah.
but generally we're seeing inflation for food and energy, not in like other areas like apparel and technology, like, you know, your Netflix subscription, things like entertainment has actually probably gone down.
Right.
So for
But what
sure,
I've noticed in my own life is that I'm spending a lot less money on physical things, $130 for 7 shirts, but I'm spending an increasingly high percentage of my income on information, right? On digital services, on things like Netflix, and it's not a lot of money.
Yeah, that actually is, it's like the cost per unit is going down, but they've started to like balkanize all the services. So now I'm paying like 15 or 20 different subscriptions, where 10 years ago I maybe had like, I don't know, an Xbox Live account and then a Netflix account, if that existed 10 years ago. I can't even remember.
No, 10 years ago they were still sending you the
DVDs. Yeah, I was using
right?
BitTorrent back then, probably. Allegedly. But they can't, to round the conversation out there, middle class is leveraged up to their necks in debt, but they've benefited on paper from the rise in their house value. So they think they're doing good. The Fed is in this like rock and a hard spot where if they try to like bring some rationality back into the markets and let the free market kind of exist again, then it will cause suffering. And all these middle class people that think they're wealthy are going to see dramatic drops in the value of their assets that they think are valuable, which will cause like a 2008 again situation to happen, because the value of your house will go down below the cost of your mortgage, and that'll put people in a situation where they'll probably want to just move and, you know, become a seller's market again. And, you know, it could get really bad. So how, like, it doesn't seem like they have any other option, but how can that sustain? How can they just keep the interest rates low, encouraging people to take all this extra risk, print trillions of dollars, do like a baseline UBI so that people have at least some money? And then how can that, like, I just don't see a world where that stays any kind of like rational value in the dollar or any fiat currency. I can't really, I don't know. Do you think they can pull it off?
I mean, this is just my opinion. I'm not an economist, but it's really hard to see how it can go on forever, isn't it?
Yeah.
It's really hard to see how it can go on forever. It's really hard to see how the price of the real value of money can be negative forever. That's just not the way it seems to violate the basic laws of supply and demand and of economics. And it's very difficult to see how that just goes on for eternity. I would be very skeptical of that. And look, I mean, I hope what winds up happening is that the economy stabilizes. I hope there's less sort of political friction, that we're able to actually come up with ways of doing things that create real growth in the economy, rather than just basically tweaking interest rates and having the central bank buy assets and artificially distorting the supply and demand of commodities, especially the most important commodity of all, which is the demand for money.
Something's going to happen. And well, thankfully we have Bitcoin. And speaking of that, someone had asked me on Twitter, I said I was interviewing you, and they asked me a question to ask you, which I thought was really interesting. I want to get your take on it. Lately, there's been a few journalists that have come out and said that they can't own Bitcoin because they write about Bitcoin. Mm-hmm. And like some of these folks have been like writing about Bitcoin for like 6 years. And if they had been, you know, they write favorably, some of them, about Bitcoin. And if they had bought some Bitcoin, they probably would be like retired by now, or at least much more secure. So do you think that makes any sense, that these policies that places like the New York Times have, where like you can't own the thing you're writing about if you're a financial journalist?
Boy, this is such a great question, and it's one that I think about all the time. I own a very, very, very small position of Bitcoin, tiny, not enough to make a difference in my life, unfortunately. I own a small position in GBTC, really, really, really tiny, not enough to make a difference in my life. And you're right. Listen, if I had invested in Bitcoin, I wouldn't need to be working right now, for sure. unquestionably. And I'll tell you two things. So one, I also own a small position in Ethereum. I'm talking like hundreds of dollars, right? Like small position, because especially with Ethereum,
that's like enough for one transaction fee.
Yeah, depending on the price of gas that day. Listen, I really made the decision. I think you're right, especially if you're covering like the Ethereum space. Like, you cannot cover these assets if you are not able. It's not like a stock, right? Like Ethereum, and I know that you're not an Ethereum person, but just to give you an example, it's not like a stock. Like, if you want to participate in and understand how it works, you have to be on these sites. You have to be doing these things. You have to be doing transactions. Otherwise, you're just ignorant of the way it actually works. And conversely, I understand the other side. When I worked at CNBC, for example, I didn't own stock because you can move the price of it. And I could completely understand how someone who was dishonest could go and if they could buy a very inexpensive altcoin and pump the price of it. So I see both sides of this debate. I really feel, just looking at my own life, if I would have bought Bitcoin even in 2017, I'd be a very wealthy man, right? And, the only good news, Brad, is the reason that I work hard is because I never want to retire. And like most people are like, I want to work hard so I can make enough money so that I can go and, buy my house in the lake or whatever and hang out and fish. I work hard for the opposite reason, because my biggest fear is that like one day I'll turn 62 and they'll be like, well, Ash, you really don't understand the way this world works anymore. And maybe it's time for you to take a retirement. I want to have enough money that I can be like, if you fire me, I'll go out and start my own thing. Because I literally, if I can do it, I want to drop dead on my keyboard. Like, I literally want to work until the moment I die. So I don't think about retiring. And I guess if there's one silver lining to not having bought Bitcoin when I probably should have in 2017, it's that like I wouldn't retire. I'd probably have a nicer apartment, but I definitely wouldn't retire. I'm going to do this till the day I die if I can.
Do you think that maybe one day you'll start your own firm or like newsletter or show or something like that?
I don't know. Some days a long time away. I got a lot of years to keep doing this. But
do you prefer like being part of a machine where you have one job to do, or do you think like you like the idea of like running the machine?
Listen, let me answer it this way. The thing that I most enjoy is talking to people. And I realize I prefer to ask the questions than to answer them. I really like doing that. I love having you on. I love the conversation that we had. I love doing that. And to me, Real Vision is a great place for me to work because they give me a tremendous amount of creative freedom, and all of the stuff that needs to happen behind the scenes to make it work, I don't have to think about it.
Right.
Like, if I'm interviewing Brad Mills at 2:00 on a Friday afternoon, like, I can just spend all week thinking about the questions I'm going to ask him. And then somebody else starts the Zoom call, and there's a producer who says, and action. And I just I don't have to think about anything, and they promote it, and they do an amazing job of all of those activities. And there's so much that has to happen behind the scenes at Real Vision for people to, for the shows to come up. And I don't think about that ever. And I'm grateful that I don't have to think about that because they're professionals who are on top of it. So I really like to focus on the part of the party that's best for me, and that's focus on the conversations themselves.
Okay, well, you can own a lot of Bitcoin and still have lots of conversations. So you got to start stacking, Ash.
I know.
Got to get on Cash App or something and just set up or Swan has an automatic DCA.
That's right.
That's people. They always talk about that one. I don't have any investments or anything in Swan or Cash App or anything like that, but those are good ways for Americans to put small amounts, or even Strike. You can use Strike, right? You're American. You can use Strike.
It's also a pretty good case for being like, hey, listen, I'm not doing anything here to, I'm passive, right? I'm just buying X number of dollars every month.
That's the idea. Get your, just like Russell Okung, get Real Vision to deposit your paycheck into your Strike account, convert like 5% of it every paycheck to Bitcoin automatically.
I think my salary is a little bit less.
than 5%?
No, than Russell Okung.
Oh, then Russell Okung. Okay. I'm like, yeah. They pay you in percents? What the heck? That's weird. The other question I wanted to go, I know we're on 2 hours here. Thanks for taking all this time and chatting with me.
No, this has been great. It's been so much fun.
Going back to the thing you mentioned earlier about how you were in the bubble in 2001 or whatever, working in that and you said there's some like analogies you could draw from that to what's happening now in this space.
Yeah.
What was it like at the time? Because I wasn't paying attention to that. I was 18 or something at the time.
Yeah.
I was playing video games or doing magic shows or playing hacky sack or something like that. I don't know. What was it like in the macro like environment as a young person seeing this happen compared to now? You're seeing it happen again, but you got a lot more experience and you understand the world a lot better.
Yeah.
How did you think about it back then? What did it feel like compared to now, what you're seeing?
That's a great question. So what it felt like back then was, man, it was a lot of fun. It was just a blast, and it was, you had this, I felt like I was participating in a revolution. I felt like the world was going to be different forever. I felt like it was only going to go up. I felt like, I was one of the lucky, like anointed ones who happened to be in the right place at the right time to get in on the action. And it was a blast. You're unlike with Bitcoin, it was physically centralized. So, you're in New York City, you're going out to, to bars and nice dinners and all that stuff. And, I was convinced that, boy, I was going to have one hell of a great life. And, then there's a lot of hardships that happen after that. And to have that experience and then to be like a guy who's like, 28 or 29 years old and you're living in your mom's basement. You going, man, is that it? Was that as good as it got? Is it over? Am I literally going to be in my mom's basement for the rest of my life? Is it just over? I mean, it gives you a real sense of humility that I probably didn't have when I was 26 or 27. But on the personal, away from the personal side, and which is, kind of funny to talk about and look back on, the real lesson that it taught me is that it's the single most powerful line. It's the Mark Andreessen line. Software is eating the world, and Bitcoin is software eating money. And that is a trend that over the long term, in my view, is only going to increase. Amazon famously had, I think, 93 or 94% max drawdown. It went down 80 or 90% multiple times. There was a period there, if you bought Amazon in, and I'm going to get the numbers wrong, but ballpark it. If you bought Amazon in 1999, you were underwater for like 3.5 years. And we've seen that in Bitcoin. We've seen that in other coins. We've seen that in the crypto space in general. These trends, the price fluctuation goes like this, but on a long-term scale, if you look at it, it's just continuing to rise in terms of the adoption of digital technology. And for me, Bitcoin is the clearest case for the expression of software eating the world in money. And I just think that that's a long-term trend that continues. I always say the one thing that I feel, and I never, ever obviously give financial advice, but the one bit of advice that I give, it's not financial advice, it's a life advice. If you want to ask me what you should invest your time in understanding the world that's developing. Invest your time in understanding how software works, in understanding how networks work, in understanding how the distributed ecosystems probably best represented by Bitcoin work. Because if you're a young person in your late teens or early 20s and you don't have money to invest right now because you're in college or you're doing training or you're doing whatever you're doing, think about where the world is going to be in 2031 and 2041 when you're going to be married and have kids and live in the suburbs and have a mortgage that you grumble about paying. The world is going to be more digital then than it is today. And I believe that distributed networks are going to play a much more prominent role in the way that we conduct our lives, in the way that we do business, in the way that we invest. And I believe, and this is just my belief, just my opinion, that Bitcoin is going to be an incredibly special part of that ecosystem. So spend your time learning, spend your time listening to Magic Internet Money podcast, spend your time, come to Real Vision, listen to what we have on offer, because this is the digitization of value, the digitization of money is a long-term trend that I think is very, very likely to continue for decades to come, whatever the price of Ethereum or Bitcoin is tomorrow, next month, next year. This is a durable trend. If I had spent the last 20 years studying harder about what was happening in the technology side, I would be much happier. I'm coding again a little bit, which is fun. But it's also like, man, I just feel like I'm all thumbs. And I feel like I used to do this like 25, 30 years ago, and I felt better then than I do today. But this is a trend that's in my view, this is just, we're never going to like, we're not, I find the probability that we're going to be having this conversation in 2031 at a bar, and like someone's going to be like, boy, everything was going virtual and digital, but wow, who would have ever guessed that would reverse? Like, I just don't see it ever reversing. Well, again, not the prices. Prices can move. But the trend is durable.
Digitization for sure. Like definitely makes a lot of sense. My daughter values the digital items she gets in her Roblox game and stuff way more than, she doesn't ask me really for much physical things anymore. She just like, whenever a birthday or special event, it's, can I have coins for Roblox or one of the other games she's playing, Genshin Impact is this new game she's really into. So kids for sure are seeing digital as valuable, and that's a good way to think about. Like I never thought about a lot of the people on crypto Twitter, especially that I interact with, and like Clubhouse and stuff, that are younger, that are involved in this right now. Like they seem so brainwashed to me, almost like they seem just so dumb sometimes, and the things that they say. But I gotta remember, like, they're just excited. They like you said, you thought you were part of some like future like thing, and I bet you that's what a lot of these people that are like following me on Twitter right now are thinking. They're like, oh, I'm so excited, I'm part of this thing. It's like this futuristic event in the world that's happening. And then like, they'll comment on one of my posts and show me some altcoin, and I'll just be like, oh my God. So there's probably,
it's like a drug, man. It's like a drug, that feeling. And like, and then and then it was physical, but now it's obviously digital, it's distributed, it's online. But when you talk to other people in the space, when when you'd go out to those bars after I would be at Credit Suisse, and you'd be hanging out with your buddies and talking about it, you're like, man, we're in the spot. You get it. I get it. Right. I don't know about these guys, but we get it. And it's an incredibly intoxicating feeling. I know exactly how it feels. I know exactly what it's like. When I look back on my own life and the challenges and the struggles I had after that time, between then and now, and boy, there were some challenges and struggles. The durable trend of digitization and software eating the world just continues to grow.
All right. Well, I'll try to be a little more understanding and empathetic to all these young people that are 20-year-olds that are telling me that they're going to be the future and all this stuff on Clubhouse.
Brad, when are you going to find some really smart 20-year-olds and come on Real Vision and interview them?
Oh, that's a good idea. I should do that.
You should.
Yeah. I'll look out for it.
All right.
Put it on the bucket list.
It's a deal.
Find a young person, invest in their security life token, and interview them on Real Vision, pump the price of their security life token.
No, we don't do that. But
well, that doesn't exist.
Have them on for the conversation.
Yes, yeah. You know what? There's not that many really young people that I have been interacting with, that aside from like Jack Mallers, but he's like, even him, he's not like super young anymore. He's, what is he, like late 20s, like mid?
I don't know, where I sit, that seems pretty young. I'm hugely impressed by Jack Mallers and the things. Yeah,
Jack Mallers is one of the best follows and listens, and he's the guy that is building Strike, the payments app that we were talking about earlier. But for sure, he's first person that comes to mind when I think of like a Gen Z alpha coder, Bitcoin, future leader guy.
Yeah, for sure.
All right. What were you going to say, Ash?
I don't know. I don't remember.
Oh,
that was like 3 seconds ago.
I got a delay now, so I'm like a second and a half delayed on your video. Are you getting the same thing for me?
No, you see, it seems like it's coming through pretty tight, actually.
Oh, your lips are like 3 seconds delayed right now, so it's hard to kind of have the conversation. But anyways, it was great talking to you. So if anybody wants to follow you, what do you think is the best thing? Twitter?
Yeah, at Ash Bennington on Twitter, and come and sign up for Real Vision for free.
All right, thanks for having me.
I should say Real Vision Crypto for free. All of our crypto content is free.
Right. All right. Well, thanks again for coming on the show, and I'll talk to you again soon.
Thanks for having me, Brad. Really appreciate it.
Bye-bye.